Yo, welcome back to the channel. uh, I'm gonna say this, okay? I'm gonna say this, all right? Because I just got notified by TradingView that I had to fill out a tax form, and I forgot that I even had a referral link to TradingView, honestly. And I literally never really brought it up or talked about it, but I do have a referral link. So if you want to do a paid subscription with TradingView, I get commission. So I just kind of randomly found $500. So that was nice. Yeah, thanks. If you go sign up, do the free thing, learn it, do it under my link or whatever. And then if you want to get the premium or whatever, I'm pretty sure it's like tied to me, so I'll get credit for it regardless, like later down the line or whatever. And if you don't want to do that and you just want to pay them without me getting paid, then do that, because TradingView is awesome. Stop using Webull charts. I mean, come on. It's 2023, dude. Ban Webull charts. All right, let's get into the chart, talk about it. I'm cleaning up. I'm like resetting my office right now, so no green screen. It's like an empty space in here. I feel like I'm in like one of those white boxes that you see in those movies, like when you're in a straitjacket. That's how I feel right now. But yeah, let's look at the ES1 chart. I don't want to look at too many things. Make sure you're following me on Twitter, because I'm obviously much more frequently posting there than I am on YouTube. That's about to change most likely, but just follow me just in case, because I say things like that sometimes and then I don't follow through. Okay, it's part of my my character, I suppose. Wow. All right, so let's get into it. All right, so if you're following me on Twitter, I did post kind of like a redone version of how we should be looking at this bear trend, okay? And this isn't bearish hopium or anything like that, because I really don't care if there is a bullish move throughout the market. I'm totally fine with that. That doesn't bother me. I'll play that side of it. But I do have a bias towards the bearish side at this stage, at least to see a pullback to this white trend. And so I really wanted to fully understand where our potential resistance points were. I created these bear trends. Why is this? Okay, that must be a futures thing. I've literally never seen that before. I hope that was always preset on my charts. That's weird. Anyway. So I made these different lines. I'll change the color of them just so that we can differentiate between them. So they all kind of like get you to the same place, but it is important to note here, right, that you can have this sort of zone up here for February, really, where you have this really lethargic, and obviously we had a big day today as far as breaking down, but you could have this really lethargic move up here for bulls and still remain underneath this red bear trend, right? Which is dated from the August rally to that CPI peak, and then it's a little bit off here, it looks like. But you see there, close enough. You get the basic idea that there is a bit of a pocket up here that could be traded into. And we do have this shorter term bull trend. Let's just draw that for now, just so we can see, visualize. You look like you're getting ready to, you're testing it right now, actually. Let's see on a shorter time frame what it looks like here. Okay, you're not really testing it if you're down on the hourly chart here. Yeah, so what's my bias? Look, I'm going to tell you now, and I've been saying this since December, essentially, that, this motion here is very distributive, okay? Everything is very archy to me, holding relatively high within the range. You did have this accumulative action occur here, but then you went back to this really archy, and I mean, just look at the nature of this chart, okay? This to me indicates that distribution is occurring. I think that the likelihood at this stage, right, and there's more to it than just the look of the chart. Also, we have not broken these bear trends. Like, we're not out of the bear trend. So, like, there's no reason at this stage. Now, tomorrow, right? Tomorrow, you could, if you want to, you can play this shorter term bullish move, because, I mean, it looks like you would have like a good bullish move come out of tomorrow. And to be honest with you, I don't even know. I know that CPI is this week. Not CPI. I'm sorry. FOMC. Maybe CPI is this week. I think last time they were the same week. But I don't really care because you're seeing the same relative indecision. You're seeing this Archie price action going into this market event. And to me, it could be tomorrow. I really should I should Google it. Let's see. Wow, you don't even know the meeting dates? Oh, they start tomorrow. Oh, okay. So starting tomorrow and then going into the next day. So when does Powell speak? If it's a 2-day, oh whatever. I don't really care. All right. So it's as simple as this. Okay. You break down here, I'm bearish until you get to this trend. Okay, and then we're gonna get a price level on that as well. You break above, I'm bullish. Price level might be a little trickier as far as like how much upside I would be expecting if that were to happen, but at least I would say that it would be reasonable to be targeting this 43.30 range at that stage. So this is like the top, okay? Like here, not the top like all time or whatever, but certainly if you were to get up here into the middle of February, perhaps, I would be expecting some consolidation down, maybe a retest here before you could say that you're going to have like even more upward price action. So just know that you wouldn't necessarily be out of the woods just by breaking the bear trend. I don't think that there's just going to be this massive squeeze through 4,300 on ES1. That's just not how I would visualize that happening. I think that there will be more opportunity if you do have that sort of move up there. That's just my opinion, though. I'm not a financial advisor or anything like that. That's just my opinion. Also relevant to be watching is this fib here. Ooh, look, that 4,300 is kind of like right here in this golden pocket zone, right? I know the chart's getting a little loud here. Let me make these lines thicker if I can. If you're ever wondering what my fib settings are, these are my fib settings. Feel free to pause. I know a lot of people ask me that. Pause the video, and then you can set them here. Just want to make these lines a little thicker so it's easier to visualize the more macro look. So because this is the fib from the beginning, right, the very top of the all-time high at 4,800 or so, down to the local low of 3,500, you can see right here that you're getting rejected directly off of this 0.5 Fibonacci at this stage, okay? And what do we said throughout if you've been watching the videos, if you've been paying attention on Twitter, what we say about ES, SPY, SPX, they love the 0.5 Fibonacci, okay? So now the 0.5 and the 0.707, right? So we always say if you advance through the 0.5, like my rule, my personal rule, the way that I play it is if you advance through the 0.5, you confirm it as a bottom. I'm expecting the 707, okay? So an example of that would be if you broke up here, obviously I'd see some retracement, some reaccumulation, but I'd be expecting that eventually you would reach that 707, and then we would see where the market is at. Okay, so that would be how I would, if you were to break the bear trends, all the bear trends, I want to see that reaccumulative action because it is always possible that you break down below, right? And then if you're rejected, then that's really nasty. But if that were to occur, I would be targeting, I would be targeting 43.84 over the coming months if that were to occur. I think it would take until April or May. And then on the flip side of things, because we really are at a turning point. You know, this is truly a turning point within the market. And I want to talk about my long-term bearish target as well, and I'll talk about my reasoning for that as well. I think I might have talked about this briefly on YouTube before. Perhaps I haven't though. And let me get my trend line as well, because I know that we have a macro trend that is tied to this thesis as well. And it's a little bit easier to develop this thesis, okay? So it's easy to lean on a bias here because you have previous price action, like a lot more previous price action to help justify this particular... Why is this not looking right to me? Perhaps it was a SPY thesis that I'm gonna have to look at that because the '08 to the COVID bottom on SPY, I believe, aligns with this thesis, but it doesn't really matter. It's not that big of a deal. Let's just take that out of it for the sake of the video, just to get the video moving along, and then maybe we'll peep over at SPY. All right, so this macro Fibonacci that I have here is from the COVID bottom up to the all-time high, okay? And you have this descending support here, okay, that aligns with this 0.5 Fibonacci. And then I feel like I had one more line. Oh yeah, it was the '08 to the 2020. We're gonna have to go look at the have to look at the SPY chart after this. But anyway, I think that there is a lot of liquidity to be drawn here. Ooh, why is that in June on this chart? Yeah, the timing is, but somewhere between late March to early May, I would say. There's a lot of attention and liquidity that is going to be around this zone at that time frame. And I'll show you on the SPY chart what I'm talking about, because until I do that, I'm just kind of like talking about nothing. Why is this EMA on here? It makes the chart look really ugly. I follow a 9 EMA. Like if I'm in a scalp or a day trade, I will have the 5-minute 9 EMA is my kind of like one of my breaking points where I'm like, okay, I'm ready to get out of my position now once that gets broken. It's really reliable to ride, and also a good place to be adding whenever you're in a day trade. I like to add there. Okay, cool. So this is more like it. Let me go back here, make sure that we're touching the '08 bottom. Okay, so you see the bottom here in '09, the bottom here in 2020 for COVID, and then here, what that creates is this pocket, okay? And you saw the pocket on the last one, but I'll just draw it again here. This sort of triangle. And so, I mean, what I'm saying is, like, this is a good, and I'll explain my reasoning too. So this is a good region for you to be looking for price, right? If you have a more bearish outcome of this bear trend line test like we've had in the past, everything like that, this is a good region for you to be looking for price to go to. And the reason is because trend lines are supported, right, by whales or institutional buyers and sellers that are having an interest in the price being supported or resisted by these lines, if that makes sense. And so what that creates, though, is right, you have, there's my they're notifying me about a tax form there in the bottom left. You can see I already filled it out, and they're notifying me again about it. I don't know what the deal is with that. But anyway, you can see here, right, institutional buyers have supported here in '09. That same institutional buyer or group of buyers or whatever, just so that we're not being conspiratorial. Yeah, Composite Man supported this trend back in 2020. And this is kind of like your big trend. Like, this is the trend right now of the decade, of the last 15 years. This is now the trend that you are watching for the end of the world sort of situation, okay? Because if this is not held, then you're going to have that really explosive move that everybody has been kind of looking for or talking about possibly happening, all the '08 fractals and everything like that is kind of pointing to. It kind of depends on this trend line being held or broken as to whether or not that's going to happen, right? Anyway, so you have this descending support here. Sorry, I went on a little tangent there. Oh, it was the midline as well. You have the midline, which we followed on the channel for a really long time while it was relevant. It's not really relevant right now. But basically what I'm pointing to is these institutional buyers and sellers, they may not all be focusing on the same trend lines. They may not all be focusing, but they will have a liquidity interest in seeing price being held at or around and also their opponents, right? So like the bears want to see this trend line, this green trend line tested again. The bears want to see this yellow midline tested again, the red descending support tested again. And so that can create a lot of liquidity pressure where institutions want to see price tested in that range. We can also look at volume range, volume profile. And I believe if we look at it through the recent here, COVID bottom, let's see what that does. Oh, yeah, so your point of control, your relative point. Oh, wait, I'm sorry. No, that's not the point of control. Tricked me because it was red. The point of control is always red. Oh, you're actually sitting on your point of control for this local range here. Really interesting. You're not sitting on it, but you're trading like right above it. I think it's currently at 400. I could have sworn there was like a volume shelf here. I might be tripping. Oh no, it's there. Yeah. It's all this trading back here. This is like a reaccumulative move. There it is. Yeah, I mean, we're getting close to it. But you can see how within the relative range, this is a relatively highly traded zone. And you have all of this, if you're not familiar with VRVP, basically it's a measurement of trading volume vertically by price, right? And so when you see these higher peaks here, those are referred to as volume shelves. And when you see it lower, they're like valleys, which basically means that it's an under-traded zone. So like specifically here, this region, this price region between about $342 and $363 is historically a very under-traded zone. And you can see that shown here in the VRVP. Hopefully that makes sense because and you can kind of see in the chart too that anytime that you've gone in this region, you spent a relatively low amount of time in this region compared to other regions, and the amount of time doesn't necessarily matter as much as the volume in that time. But of course, if you have more time in other regions, the volume will be higher. Does that make sense? So yeah, so that's pretty much the video. All the things that I'm kind of watching. Again, I'm not here to I'm not trying to predict what the next move is going to be. I'm telling you where my bias is and the reasoning behind my bias, which is the bear trend is what we need to be watching right now. There really is no significant long-term bull trend that's essentially supporting this. And so we need to see the market shift in behavior in that manner before we need to assume that me personally, you don't need to do anything. This is not financial advice, okay? I'm just telling you my technical outlook, and my technical outlook is that I personally want to see the bear trends be broken before I shift into a bullish stance on the market overall. And the time to become bullish is not as you're testing macro bear trends, in my opinion, the way that I look at the market. I'm not going to go, we're testing the bear trends. And you guys have seen that on the channel. I'm not going to go, we're testing the bear trends, and so now I'm going to get bullish because we're so high. Quite the opposite, as a matter of fact. I want to see the market prove itself and get through here. Because, again, I've said this over and over again. If you buy here, if you buy long-dated calls here, how much more money are you really going to make by buying long-dated calls versus if you were to buy them above these trends and play up to that 4,300 range that we were talking about? If you just waited, right, and saw these trends broken, versus the risk that you're facing if you do get rejected, right? So that's kind of just the risk to reward, how I'm looking at it, why I'm not playing it in that way. I am currently looking to the bearish side personally. That's just the way that I'm looking at it. I know a lot of people have gotten really bullish, but I do think that this is just a really baity move. And, I mean, you can still see moves back up, right? I'm not saying that. You can obviously see that. We've seen it back here, right? You just kept on not over yet, that's kind of the nature of the market, right? is that they will sit there and play the liquidity as long as they can. If they're really distributing, they'll sit there and go, oh, I mean, they keep buying. I mean, we're going to keep selling up here until we feel like we can't anymore. And then we're going to go down and we're going to find support at lower prices, which I would think would be down here first. After all of this tomfoolery that's that's been occurring up here. This move is just not motivating me from a bullish stance. It's just not. This is just so high hanging, and I feel like this right here is a failed breakout. You know, I just think that this retest here was not necessary for you. If this was accumulation, this retest here should not have been necessary at this stage. I think that the institutions do not believe that the market is ready to be marked up yet. I think that they want to search for lower liquidity. That is just my personal opinion. That is how I see the market. That's what I think the institutions are telling us through the price action. I could be totally wrong. I think that crypto actually looks relatively good in the coming weeks and months. Bitcoin is over its bear trend, still over its bear trend here, hanging out. Now, if this thing loses, this is the bear trend I'm referring to. Oh my goodness, this is the big boy chart. We'll save this chart for another day. Bruh. Hold on. Let me, hold on. Let me, I gotta get this off my screen so that I can, I don't know why it's not letting me change the thing. Give me 1 second. I just don't want any of my info to go on screen here. Okay. I don't know why it keeps asking me to do that. All right. Yeah. So this is a crazy chart. I need to make a video about this chart. Anyway, Bitcoin is I mean, it looks this is just a funny range. This really looks redistributive. Oh, I do think this is actually going to end up being a failed breakout. Yeah, that makes sense, dude. It's kind of disappointing because, even though I am, generally bearish on the market and, Bitcoin performing historically the past few years kind of relies on the market doing well, part of me wanted to see Bitcoin, go crazy into the middle of the year, because I just thought that would be really fun. I guess I'll just kind of leak the chart a little bit. I mean, I posted on Twitter before. I didn't really go into detail on it, but basically, the thesis is this is the all-time chart on Bitstamp. I don't know of an earlier chart than this one, but it's basically just a thesis where I combine some Wyckofian sort of looks as well as Elliott wave into it, and I just made it like a 5-wave sequence. And then I have these logarithmic regression bands. So basically, the bands are tied to Bitcoin's historical returns. And I actually have them notated here, I think. Yeah. So the return on Bitcoin historically is regressing very aggressively, actually. So from halving dates, so these white lines that you see here vertical are halving dates for Bitcoin, which have always led to a cycle. And I don't think the next halving date is all the way out here in 2027. I think it should be in there aren't set dates, preset dates, but it should be in 2024 if I'm not mistaken. I could be wrong though. I gotta Google. You can just Google when is the next Bitcoin halving, and then they'll give you a time estimation, which is pretty reliable because it's dependent on how many blocks are mined. But anyway, you can see here that I don't know what that line was. The first wave, we'll say, first cycle from the first halving, other than the Genesis block at the beginning of Bitcoin, was 9,000%, and it took 371 days. Then the next halving occurred in July 2016, which led to a 4,000% return over the course of 490 days. My family is home. I got to close this door right quick. I'm back. I'm gonna say my fiance is calling me. And then the last one was 705% at its peak over the course of 546 days. Obviously, you had this earlier peak here. That makes it a little bit trickier. But basically, this curve line is representative of if that regression continues, right? Same thing goes with this support band. And this support band, you're having a more consistent loss rate historically, and not a consistent return rate, right? And so what that causes is long term, this regression band, right? Actually, you have a crossover in 2027, okay? And so that could, I mean, it right now would say that like the likelihood is that like you have like one more kind of rally after a halving, for example. And if you cannot break through this, then you actually would have like we would have to chart a little bit more to get a better idea. But the all-time Fibonacci, if you were to draw it on this 5-wave sequence, like a 0.5 Fibonacci would be at like $400, which is pretty crazy. So I don't know if I believe that Bitcoin will go to $400 or whatever. It seems kind of far-fetched at this stage. But I was kind of hoping that what would happen is you would break out here and you would actually test this rising wedge like over the course of the next like 6 months. You'd have a crazy rally back up to the 70K region before you got distributed back down. But I do think that what's going to happen here more likely is that you get rejected down here and you trade down to like $12,000, and then maybe there's the potential for a longer term bull market structure to develop from there. So that's pretty much the video. I'm going to end it there because I've been talking for 27 minutes. I'm ready to stop and then get back to working on my office. But hopefully you enjoyed the video. And if you did, make sure you drop a like. Remember, the TradingView link is down below. If you sign up there, I get money, apparently. I didn't think that anybody used my referral link, but apparently they do. So if you've been thinking about it, I'd appreciate it. It helps support the channel and content like this. And until next time, peace.